Okay, so balance the scorecard. Okay, this is must be a new concept for you. Okay, so this one is useful. It's just one approach to measure performance. Okay, one approach to measure performance. At the university, right? Basically, you are measured with your grades, right? With your grades, we have different components. We have assignment, quizzes, midterm finals, right? These different components eventually together, jointly, will measure your performance in this class, right? For corporations, right? For corporations, how do they measure their performance, right? So one thing is number, right? One thing is number, financial measures, right? Because for for-profit corporations, they want to make money, right? So ultimately, they want to see better net income, right? The financial numbers. But also for this balance sheet scorecard, they also gave a little bit of emphasis on the non-financial measures, okay? Has nothing to do with the money directly, right? But these measures could have an effect indirectly, right, on your performance operation, okay? So this non-financial measures will help you to anticipate future results. What do we mean by that? Okay, so for example, right, if a company, okay, if a company, they just want to use your labor, they don't care about you as an employee. You are just a number for them. Okay, they just want to use your labor, right? They don't care about your future development in your career, right? They don't train you, right? You just do whatever you are doing year after years, okay? So what would be the result for that? I mean, employees will not be very satisfied. They are very likely to have a high turnover rate, right? Okay. And also, right, you know, and also if the employees, they are not happy, right? They may probably make mistakes, right? They may probably do their best at their, right? They may not do their best at work, right? So think about those things. How does that going to affect your next year's financial result, right? Financial result. So you can see non-financial measures. Let's say the number of hours staff training, right? That has nothing to do with how much money you make, right? But the number of hours of staff training is important, right? It can indirectly affect your future results, right? Okay, so this balanced scorecard approach essentially is incorporate both financial measures and non-financial measures, okay? Both. And it's quite comprehensive, which I'm going to show you, okay? It covers all kinds of the aspect of the business operation. Okay, so from this picture, you can see there are mainly 4 aspects: financial, learning and growth, internal processes, and customer. Okay, so you can see this is quite a bigger picture, right? Quite a bigger picture. So we are not only focusing on how much money, how big is my bank balance, right? We're also concerned about the staffs, right? About employees. Are they learning, right? Are they growing with us, right? We also want to understand the internal process, right? Are we doing the operation in the most effective way, most efficient way, right? If your competitors is using machines, robots, right? You are still carrying lots of laborers, right? You have to think about, is my, you know, internal process justifiable, right? So if the minimum wage is going up, right? So McDonald's, they just have to, you know, implement those auto pay style, right? So instead of hiring lots of cashiers, right, collecting cash and credit cards payment, well, those people, the cost is getting higher because of the law on the minimum wage, right? So then they have to think about the internal process, right? Maybe they will, you know, install all those those big screens, right? So the customers just order from the screen themselves, right? And customers, right? Customers, you also keep in mind in your customer. Are they happy, right? How after they come to your place, use your service, buy your product, how do they think about it, right? And it's very important, right? The customer's feedback would be really important. Are they going to come back again? Are they going to return for future, right? For future business? That's going to all affect your results, right? So you can see that this is a very comprehensive picture involving not only financial measures, but also, staffs, right? Employees, customers, right? So this is a much bigger picture, okay? So, so for financial, so this is more the traditional way, right? Traditionally, as a boss, that's all I care about, right? I only care about how much money I make, right? Eventually. So this is financial measure, performance measure. For example, so what would be some of these measures, financial measures? Can anyone give me some example?
Profit.
This is, yeah, profit. Like, can you tell me some specific numbers, terminologies, financial terms? Yeah, I guess profit is one. Okay, but there are different ways to measure profit, right?
Profit margin.
Yeah. Okay. Yeah, profit margin. Okay, I'm sorry, I already showed some of the examples. Return on assets. Okay, and net income. Right. This is all the way to measure your profitability. Right. Different ways to measure your profitability. Credit ratings. Right. Credit ratings means how credible the company is. Right. This is going to affect your borrowing ability from the bank, from creditors. Right. Your ratings are high, the market will perceive you as have a low risk of going bankrupted, right? So therefore, they're more willing to lend you money, right? And the share price, right? This is about the investors, right? So if the share price is higher, you can raise more capital, right, from the investors. And the profit per employee, right? This shows that how efficiency the human capital is, right? How efficiency human capital is, right? So for example, at the UFL, okay, I mean, I should not use UFL as an example because they are not for-profit organization, right? So like McDonald's, right? So, for a local branch, right, how many employees they're hiring, how many money at the end of the year they obtain the profit, then they'll figure out how many profit is earned per employee, right? So this is all tapping the financial perspective. Ashley, do you have a question? You have comment?
No, sorry, I left my hand up by accident. I'll take it off.
Okay, yeah. Okay, so I guess this perspective is pretty straightforward. And the learning and growth, okay? So this aspect wants to see how companies making effort, right, to try to treat their employees well, right? So you want to make sure your employees' skills is updated, right? You want to make sure they're happy, right? They're healthy, both physically or mentally, right? So for example, at the UFL, we have some kind of professional development funds, right? So every year they will give each professor maybe about $2,000, $2,500 for us to use, right? You can buy books, you can attend the seminars to pay for the fee, right? You can go to conferences to learn something new, right? So this is all. This program is the support from UFL to further develop the professionals, right? The employees, okay? And employees satisfaction, right? Employees satisfaction. Boy, I would be very hard to work for anyone if I'm not happy at the workplace, right? It's just like happy employees will deliver, right? They will deliver the outcome, right? I guess many of you are working, right? You know about that. By the way, are you satisfied with your job? I want to see. Are you satisfied with your job? If you are, sum up 1, 2, 3. Ruben, no. Okay. Either way, I mean, the reason why you are here, you are hoping that you would develop more skills, right? Maybe you would change your job position, right? You may improve your job situation. Okay, so so that's the learning and the growth. Obviously, it's important, right? As a company, you just have to retain the people, the human capitals, right? So if you, I can't believe if all the professors quit at UFL, right? So we are not happy and we quit. So how are they gonna operate, right? So make sure keep your employee happy, right? Keep your employee happy. Especially when you are in a shortage of labor, right? If the labor market is short of in a shortage, right? Okay, so oops. So here, can anyone give me some? This is a non-financial measurement, right? Can anyone give me some ways to measure this? To measure the learning and the growth? Ashley?
Would that be like your, oh, maybe not, but your inventory turnovers and everything to measure that, how you would be able to keep, I don't know. I think I'm wrong, but I was just trying to guess.
Yeah, I know what you are trying to say. You are trying to say employee turnover, right? Yeah. Not the inventory turnover. You are trying to say employee turnover, right? Yeah. So the
Yeah,
higher,
sure, whichever one's right.
pardon me?
Whichever one's right.
Okay, yeah. Okay, Rachel.
One would be like taking a survey of your employees annually, seeing if they're happy and engaged.
Okay, yeah, just directly ask them, right? Serving them for their self-reported, right, result. Yeah, okay. Tammy?
Okay, I don't know what name to call it, but it's like when your employees have been able to like master their job and they're able to, work more effectively, kind of. So they're able to deliver with less spoilage or wastage, something like that.
Okay, yeah. Thank you. Janaya?
I'm thinking like training, like how much training they put in to get better.
Yeah. Okay, very good. Yeah, let's take a look at what I have here. Percentage of employees leaving in less a year. So they can't even put up with the company for a year, right? They just leave right away. Number of cross-trained employees, ethical violations, training hours, reportable accidents, right? So this would be a measurement in terms of how the company is doing in the learning and the growth, right? When I was with MMP as accountant, we have trainings all the time. Okay, so during the tax seasons, we have to watch the tax news, right? So every month, okay, so they make a video tax news during the tax season, right? We have to keep us updated with what's the current tax law, what's the new, right? What's the new benefit, what's the new deductions, all those kind of things, right? And we also have to keep updated with all the professional standard, right? We are using IFRS, right? There are new, provisions, whatever coming out, right? We have to learn. And as a professional, as a CPA, every year we have to report the professional development hours, right? We have a minimum amount of hours every year. We have to be able to show to CPA that we are actively engaged in the learning, right? In the professional development. Okay, so internal process, right? Internal process. So this aspect was dealing with the value chain, right? The value chain. How are you doing with your research and development? Are you making new products? Okay, and how fast you can, how quickly you can deliver the items to your customers, right? If your customers have some kind of after sales issues, can you be able to help them to solve right away, right? So I think in Canada, it's pretty good, like a Superstore, Walmart, or whatever, Costco, right? If you decide that you made the wrong decision to purchase something, right? And you can probably return the items, right? Without experiencing too much difficulties, right? They have to honor. This is the way of their delivering their customer service to make sure they're happy, right? And other things would be like, you know, like I mentioned before, right? So as a professor for students, right? Are we using the most effective tools to teach, right? Or we are the old school, right? We have to use, you know, we have to use a chalk on the blackboard, right? That's the old school, right? So nowadays, right, we have different ways to teach, right? Like I can make those interesting animation videos for you, right, to watch, right, to make it more interesting. So those are the things that, you know, internal process, right? How are you gonna deliver your service and your product, right? Can you do it for cheaper, right? Can you do it for better, right? Those are the things you want to consider, right? Even for yourself, right? You are not an organization, but have you ever get a moment to just to have some quiet time to think about how can I improve my own time management skills, right? Am I doing these tasks in the correct order, right? Should I go to gym the first thing in the morning, right, to work out, get some muscles, right, keep you healthy, or should I maybe should I read textbooks because I was very alert, right? So what is the order of those tasks, right? Should I do gym workout the last thing in the morning or the last thing in the day? So, you know, this is definitely a question. Maybe there's no right or wrong answer, right? Depending on the people, but definitely, you know, this internal process, right? You know, how you do things. Can you do it for cheaper, for better, for more efficiency, right? You're gonna ask yourself, right? So I have a part-time accounting practice, okay? So I don't hire the admin now, right? You know, companies usually they have admin people to sort out the papers, right? You know, contact clients, you know, asking them to pay, right? Sending them invoices, right? But all I'm doing, I'm investing in a system, right? And in this system, I can easily, right, to do all these tasks by clicking different buttons, right? So, you know, internal process, right, is really helpful if you are investing in the right tools, right, in the right systems. It's gonna save you a lot of money, right? It's gonna make things more efficient. Okay, so that's the internal process. Okay, how long, you know, if you are tracking companies, right? If your competitors can deliver items in 10 days and it took you 1 month, I think you'll be out of business very soon, right? So again, this is all the internal business perspective, right? It does not have a number tied into it, but it's going to affect your future outcome, right? Oops. So the examples would be the percentage of defect-free product, right? And so if you go to Tim Horton, you are asking for one type of coffee, right? They give you a different type, right? Right. So, but this is the internal process, right? How can you ensure, you know, the staffs are making the right product, right? So, stock out, labor use rates, waste reduction, right? Waste reduction, planning accuracy, right? So this is all relating to the internal process. Customer perspective, right? So when customer is happy, they will do two things. First of all, they will return, right? They will be the returning customers, right? So it's not like you only make one profit at one transaction, right? They will come back, right? So as an accounting professional, we are very lucky in this career, right? So So basically, if I'm able to keep my accounting client happy, they will come back every year, right? Because they have to do tax returns every year, right? Okay, yeah, thank you, Rachel. Yeah. But you think about lawyer, right? Think about lawyer. So when people divorced this year, so they will not divorce again next year, right? so lawyer has to constantly find new clients, right? They don't want, well, I hope they don't have a lot of returning clients. How much trouble that person would be, right? If you have to keep coming back to the lawyer all the time, right? So, but as accountant, we are lucky in this kind of business that if you serve our customers well, they will come back, okay? And also, by word of mouth, they are going to make referrals to their friends, family members, right? So think about that. So your business is like snowballs, right? You do it well, it's growing very fast, right? So think about that. This year you have 10, right? Next year, if one just refer one, you get right 20 and then 40, right? So it's very fast, right? So and also that you're gonna build a reputation, right, as a professional, okay? Because they do talk about it, right? Okay, and also how do you feel about Costco's customer service versus Walmart customer service? Which one do you like? Well, I'm sure you have been to 2 stores, right? I'll be very surprised that you tell me that you've never been to Walmart or Costco, right? But tell me which one do you like better? Yeah, Costco, right? What do you like about Costco? The customer service. Rachel?
I like that it's really easy to get around and find things in there, and there's always employees everywhere. So if you're looking for something or if they moved something, they'll help you.
Yeah, that's true. Anybody else?
I'd say like the return process is really straightforward.
Okay.
No questions asked, that sort of thing. It's like pretty simple.
Yeah. So they just trust the customers, right? So they know. Yeah, I agree. I have no issues to return things to Costco. All good experience. Yeah, go ahead, Tammy.
I also like the fact that they have like 2 people helping when you're going out, and the other person is helping you pack it in the cart. It just makes everything easy.
Yeah, and they did a good job, right? They packed everything very well, right, to your shopping cart, right?
Yeah, sure.
I like it. Yeah, that's the only thing I get. I only get that service in Costco, right? In other retailers, nobody else is doing that. I don't remember. At least I never experienced anything else like that. So yeah, so that's the customer service, right? That's the word. So I don't have to be panicking, right, to pack all these stuffs because there's a long line behind me, right? So if I go to Superstore, Walmart, I always felt the pressure. I have to do this very quickly, right? Because people are in the line, they're waiting, right? But in Costco, I never feel that way. I'm more relaxed. I also like the parking space, right? So they make sure that there are enough gap between 2 cars, so it's easier for you to park, right? So you can see, right? That's why they can charge a membership, right? People like it. Like I really like Costco. Okay. So how about at UFL? Do you like the customer service at UFL? UFL? Do you dare to say?
Of course.
Just kidding. Sorry, I interrupted somebody.
No, I said of course. We like it.
You like it? Okay. Even if you don't like it, you dare not to say. Because this is all recorded.
Exactly.
Yeah. Okay, so that's the customer perspective. So do we have any questions? I mentioned about this bigger picture, right? Financial, learning growth, internal process, and the customer. This together, this is the 4 main aspects of the balance scorecard. Do we have any question about this? No, Ashley? That must be a legacy hand.
I think I just had my hand up again. I really should turn that off.
Yeah, no, that's okay. Yeah. Do you have a balanced scorecard for yourself? So sometimes if we need to have a bigger picture, right? Sometimes we need to have a bigger picture. You will find that people with a bigger picture, those people are most like a holistic approach, right? They see more things, right? They try to bring more things, pieces together. Maybe it's beneficial for them, right? So for example, I don't think GPA is the only thing you care about from UFL, right? For sure, that's a very important measurement of your performance, right? What about your social skills, right? What about your speaking skills, right? What about your team building, right? Conflict resolution skills, right? So you also can think of those as different pieces of the blocks, right? That's a bigger picture in order for you to be successful in the future, right? Trust me, if you are not comfortable with speaking publicly, right, you have to get comfortable at some point, right? Otherwise, you'll be always that quiet person at the corner in your office, right? That's exactly the reason why we have participation marks in these classes. We are encouraging students to speak up, right? Because we know you're gonna benefit from that in the long run, right? And we have group project. Why, right? In management courses, we have lots of group projects, right? Because we want you to learn how to work with other people, which you cannot avoid, right, at the workplace. So there are some negative experience, right, in terms of participation and the group project. But I want you to think I don't want you to be short-sighted, right? Just you only think about this semester, this course, right? Just think about your long-term career development. These things will be very, very important to you, okay? If I'm shy, if I don't have a public speaking skills, I can't be a professor, right? I have to speak in front of you, in front of other professors in the conference, right? I have to be able to communicate in the journals, right? To publish papers, right? So once you have all these skills, you will realize that your career path will be more broad, right? You have more options, right? I came as an international student, right? When I first came here, my English is not very fluent, right? So if I can develop my skills, I'm pretty sure you can develop your skills and you can do it better. You just have to appreciate all the things we are doing and trusting that we are doing this for your benefit, okay? So if you don't like group project, you don't like participation, please understand, it can be very beneficial for you in the long term. Okay, so make sure you think about your own balance scorecard, right? Think about yourself as a brand, right? Okay, how other people think of you, right? So I think that's important, okay? Okay, so here, customer retention, percentage customer will refer, response time per customer request, brand recognition, customer service expense per customer, okay? So balance scorecard, okay, they will incorporate both financial and non-financial measures into the picture, okay? And also this picture under each, they are going to have the specific measures, okay? Like the examples I have shown you, right? These are very good because at the high level, right, senior management, they will set up the corporate goal. And those goals will be translated into very specific measures under the different aspects, okay? So everyone in the organization actually can look at this balance scorecard and they know what they should do, okay? So everyone in the organization, they have this balance scorecard and they know what they should do, okay? And in these measures, it's very objective measures, okay? They are not very vague, right? So for example, for product quality, right? This is the internal process. Under the internal process, there's a measure probably we want to concern about the product quality, right? But you don't just leave that, improve the quality of the product. That's too vague. What do we mean by that? So you probably have to include some of the measures. For example, the percentage of the defect product, right? The lower the better, right? Let's say we want to achieve a goal 3%, right? So this would be one example. So you have very objective measures. Okay, and you know, everything, okay, from all aspects of the organization will be put out into one balanced scorecard, okay? And it's well balanced, right? The reason why it's called a balanced scorecard is we are not only focusing on the numbers, we are not only focusing on the customers, right? Because we are not a charity, right? We have to make money. We are not only focusing on the staffs, right? We are not only focusing on the internal operation process. Instead, it's a balanced picture, right? We weighted everything, right? We are weighting everything together, okay? So here's the question. The balanced scorecard would measure financial measures against internal measures, past outcomes against the forward-looking measures, hard objective measures against the financial measures, short-term objectives against the soft objective measures. Which one? Santiago? You are muted. Okay, so what does a non-financial measure do, right? The financial measures, are they past the result of future result? Financial measures, are they past the result of future results? So when you know the net income, is that from the previous year or from the future years?
The previous
Year, right? Right? Okay, so those are the past outcomes. For the non-financial measures, okay, non-financial measures, are they able to predict the future results? If I treat my employees, treat them better now, do you think they'll be happy next year? If I treat my customers well this year, do you think they will be happy next year? So for non-financial measures, is this forward-looking measure?
So be forward-looking?
Yeah, forward-looking, right? So the answer is second, right? So financial versus non-financial. Financial are the past outcomes. Those ones already incurred. You can only see, oh, how well I'm doing last year financially, right? What about in the future? Well, I better have a good process. I better train my employees well, and I better treat my employees well. So I'm hoping next year, this effort is gonna translate into a better financial number. Does that make sense? Okay, if everything makes sense, 1, 2, 3, sum up. Okay, good, very good. Okay, so I'm going to talk about here. So, okay, good. Now we are done with the balanced scorecard, okay? So I will then, so that's good. We have this done. So now let's go back to last class. We finished this one, right? Did we?
Yes.
Yes, okay. Okay, so now let's talk about the overhead variance. So we have done materials and labor, right? Now let's deal with overhead variance, okay? So what is the overhead variance? So basically, it's the actual cost, okay, actual cost of overhead incurred. Okay, the difference between the actual overhead cost versus the overhead cost you applied. Okay, and how did you apply it? You based on the standard cost driver units. Okay, so that is the overhead variance. Okay, so the process is almost the same. The only tricky part is that the overhead has two components, variable overhead and fixed overhead. So we have to break it down into two components and talk about each, okay? So let's take a look at the total overhead variance example. So basically, the activity index is still the direct labor hour, and they are using this, okay? They are using this as the base to calculate overhead, right? And to manufacture 1 liter of the energy drink, they need 2 hours direct labor, okay? So they calculated the predetermined overhead rate to be $5 per direct labor hour. And you know how this works, right? Back in the earlier chapters. And $3 are for variable, $2 for fixed. So that's the $5, $3 for variable, $2 for the fixed. Okay, so the overhead applied using the standard activity base will be, okay, so first, for each liter, you need, they are going to manufacture 1,000 liters of energy, and each liter is going to take 2 direct labor hours. So in total, I'm going to need 2,000 direct labor hours. And each direct labor hours, okay, times the standard rate, $5 overhead per direct labor hour. So then the overhead applied is $10,000, okay? Suppose the actual direct labor hour for the period was 2,100. The total actual overhead cost incurred is 11,400, and out of which the variable component is 6,500. Okay, so this is all the information given. Okay, so now what is my total overhead variance? We are using the actual overhead. That's the actual cost, right? How much money you paid for, right? 11,400 minus, okay, so the standard overhead applied 10,000. So the total overhead variance is 1,400. And because the actual is more than standard, this is unfavorable overhead. So next, we are going to separate this total overhead variance into a variable component and a fixed component. Okay. So this picture shows that the variable overhead variance. Okay, so you're going to follow me. We have done this on Tuesday. On the left side in this picture, these are the actual numbers, right? On the right side, these are the standard, right? Standard cost. So standard cost, there are 2,000 direct labor hours. Each labor hours for the variable component is $3. That therefore is a 6,000, right? 6,000. And this is the 6,500. How do we know it's the 6,500? It's given right here. The total actual overhead cost is 11,400. Out of this, 6,500 is the actual variable overhead cost. So actual cost on the left, okay, and the standard cost on the right. And the difference is $500 variable overhead variance, right? Unfavorable. So in the middle, what do we put in the middle? I just want to see if you forget after one night, after 2 days. In the middle, what is that? I'm going to put a box here. In the middle, what is that? Okay, let me ask you, if you know what you're going to put here in the middle, please, I will count 1, 2, 3, okay? So 1, 2, 3, if you know what to put in the middle, sum up. 1, 2, 3. Okay. Definitely not as many as I would hope you guys. Okay, you just not at the same time. Oh, that's not bad. Okay, that's good. So what is that? Can Patricia, what is in this middle here, this box? Patricia?
Sorry. The middle is first you need to know about total standard hours that it's given, and for the standard rate that is 3, it is a 6,000, and the 6,000 6 is the total variable overhead cost minus the result of the total standard hours for standard rate, and minus that difference is it give us the units. Then we can find the variance between.
Okay, so why don't you tell me that what is the number in the middle? You have calculated this number. What is this number in the middle? Okay, that's okay, Patricia.
It would be 500.
500. Yeah, it's 500 here. Yeah.
Yeah.
This picture is showing the difference, the total budget variable overhead difference. That's the 500 unfavorable. It is showing here. Okay, so maybe I didn't make my question clear. I'm sorry. Yeah, what I'm saying in the middle, I'm not talking about this blue box. I'm talking about, in the last lecture, I talked about left, this is the actual cost, and the right is the standard cost. And then I'm going to figure out, to tease out the two variants. One is the two variants here. I need to set up a box here, okay, in the middle. Okay, so Ashley?
I think it works out to be like your total standard hours. This would be your, I believe you use the standard rate still, but you use your not standard hours, you use your actual hours, right?
Okay, very good. Yeah.
Sorry, I don't have a calculator with me. I'm actually driving, but I'm still trying to participate.
Yeah, no, that's good. Because here is the AQSP, remember? A queen-sized pillow, right? A queen-sized pillow. Who still remember this? I want to take a look. If you remember a queen-sized pillow, that's AQSP. Sum up, please. Okay, that's not bad. Okay, so remember this, right? This is very important. Okay, so because you guys are very good students, because I'm very happy today, I'm going to tell you something. Okay, this is really important. So I'm really going to get your attention. Okay, so it's very important. If I get your attention, please sum up. If you are really attentive to what I'm going to say in the next 1 minute. Okay, okay, good. Yeah, almost error. So in the final exam, okay, in the final exam, there are going to be one question that you have to do it it's a problem solving questions, right? So that question is about variance, okay? So there's one question, okay? It's gonna be like a problem solving question in the final exam. And that topic is about variance, okay? So are you happy with this information? Yeah, okay, so that's my gift. That's my gift for you. Okay, so now you know, right? It's really important you know what's in the middle. I know many students, they always mixed up. They use the wrong numbers, right? Then they totally mixed up the variance. So make sure you use the actual quantity and the standard price, okay? So the standard price is the $3 and the actual is the 2,100, right? So this number is 6,300. And the difference here, if I use 2 minus 3, what is this? It's called efficiency variance, okay? If you are being efficient, you're going to use less hours, right? So this is the efficiency hour variance. The difference is 300, unfavorable. That means you are not efficient, right? You are thinking you are going to use 2,000 hours, but you are using 100 hours more. So you are not being efficient. That's a negative. So here, the difference from here is the spending variance. The spending variance. So that's basically about the price, right? So you are using the actual hours, right? The actual amount of hours, and the rate has changed, right? It's actually cost more than $3 for each direct labor hour, right? Okay, so then you can see that the 500 unfavorable variance is actually break into a spending variance 200 and the 300 efficiency variance. Okay. Okay, I think you all know this. Let's see. Can you tell me what's the answer for this one? Send me a direct message, okay? Send me a direct message and I will count it as your participation. Okay, so work on this one. I'll give you some time. Give you 2 minutes to work on this one. Okay, so I have an answer. Okay, thank you, Tammy. Yeah, thank you, Kate, for letting me know. Yeah, if you have to go for other reasons, yeah, please go ahead. Yeah, make sure you would watch the other the left videos on your own. Yeah, thank you, Ashley. Thank you, Santiago. Tammy, can you please go through your answer? Tammy, are you there? So Ashley, do you mind to go through your answer? I cannot hear you, Ashley. You are muted. Can you hear me, Ashley?
Yeah, I can. Sorry.
Yeah.
Trying to get everything organized while driving. What did you say? Sorry.
I mean, do you want to walk through that question? Your answer is correct.
Oh, well, I think I kind of figured it out, but at the same time, I kind of guessed at the same point because I was in a rush.
Okay, I see.
So, and plus, honestly, like I was doing my assignment and I was having a really rough time with manufacturing overhead variables. So
Okay.
I was actually hoping that you'd be able to explain it so that I can try and understand it even more.
Okay, yeah, I will do it. So here, we are asking, so again, so we are trying to figure out what's the middle box, right? Only we know the middle box, we are able to do the calculation, right? So that's the standard rate and actual quantity, right? So, and we are dealing variable overhead, right? So what is the standard rate? Can anyone tell me what is the standard rate for this question, the variable overhead? Ashley?
I'm pretty sure that was the 720, right?
Yeah, 720, that's the fixed, yeah. And what is the quantity, actual quantity? What
is that the 40,100?
40,100. That is the 40,100 used. Okay, so that's how much. That's the actual direct labor hour, right? Yeah. Okay. And so if you use this number, you times here is a little bit tricky, right? It's a little bit tricky. So I will revisit here. Take a look, okay? So here is the total actual hours. Okay, total actual hours. So what is the total actual hours? 40, 10. So you use 40, 10. Sorry, 40, 100 times 7.2. So I got 288,720. Okay, so what's the standard? The standard for the variable is minus what's the standard cost? How to calculate standard cost? standard cost is you produced 7,800 units, right? So you produced 7,800 units. Each unit is going to use 5 hours. So this number times 5. Okay, so 7,800 times 5. That's the 39,000. That is the standard hours, right? Okay. So you overused the time, right? So from 4,100, okay, I'm going to write this down so you can better follow. So what is the standard DLL? So that's gonna be how many units you produced, 7,800, and each unit is gonna take 5 direct labor hours. So this tells me the standard direct labor hour is 39,000. Okay.
Sorry, just a quick question. Where did you get the 5 from? Sorry.
Oh yeah. Do you know where? Can you see these two numbers? 7.2 and 36.
Yeah.
Okay, yeah, I see it.
You see the 5, right? So if each direct labor hour is 7.2, to make each unit, the cost is 36. That means you have 5 direct labor hours, right? So 5 times 7.2, that's your 36, right? For each unit. Okay, so each unit, you're gonna need 5 direct labor hours.
Thank you for
Yeah. So now your standard direct labor hour is 39,000, right? And what do you really used? The actual DLH is 4,100, right? So you are not being efficient. You should use 39,000, but you actually used 1,100 more, right? So now, if you take the difference, okay. So you take the difference, oops. Okay. If you take the difference, 4,100 minus 39, okay. And then this one times the standard rate, 7.2. So you should get 7,920, and this is unfavorable, right? Because you spend more hours than you would think according to your standard. Are we clear with this question? If this makes sense, 1, 2, 3. What if this makes sense? 1, 2, 3. Okay, good. Thank you. So that's this question. Next one is about fixed overhead, total fixed overhead variance. So this one is the difference between the actual fixed overhead versus the fixed overhead you applied, okay? So in this case, the fixed overhead variance can be separated into 2 variants. One is a spending budget variance. The other one is a volume variance. Okay, I will show you what we mean by this. Okay, so this is only for fixed overhead variance. We will separate into 2 variants. One is called a budget variance, which is also called the spending variance. Okay, and the other part is called a volume variance. Okay, volume variance. Okay, so when you are answering questions, do not talk about fixed overhead efficiency variance. Okay, the efficiency variance is only for variable overhead. Okay, so for fixed overhead, there's no such thing called efficiency variance. Okay, it has 2 variants. One is spending or budget variance. The other one is called volume variance. Okay, so for the fixed overhead variance, you're gonna need your static budget, right? Remember, we have a master budget, which we also call the static budget. This is for those cost that is fixed level, right? They have a fixed activity level, right? Remember that in the static budget versus the flexible, right, budget, right? Okay, so on that budget, you would have a normal capacity. So on the budget, you would say, you know, when my company is operating at a normal condition, I'm gonna need 26,400 direct labor hours for the year. Okay, so 26,400 for the year. Okay, remember that number. So then, and the cost is budgeted to be 52,800. So therefore, when I calculate the predetermined rate, I'm using the budgeted fixed cost, overhead cost, divided by the budgeted normal capacity of the activity, 2,600 direct labor hour. So $2, right? We talked about this, it's $2 per direct labor hour. So if you are manufacturing 1,000 liters of energy drink, each liter is gonna cost gonna take 2 direct labor hour, and then each direct labor hour is gonna, the rate is $2. So I figured out I'm going to apply $4,000 of the overhead, fixed overhead. And the result is the actual direct labor hour is 2,100, and the total actual fixed overhead cost is 4,900. So that's the information given. So now let's take a look. So again, now on the left side, these are the actual spent. Information given, 4,900, okay? On the right side, these are the standard cost, right? We already figured out, okay? So that's $4,000, right? So in the middle, okay, okay, you're gonna use the number from the budget, the static budget, okay? In the static budget, so it's at 26,400 per year, okay? So from this budget, from this static budget, okay, it's at 26,400 per year, okay? So for each month, that's 2,200 hours. 26,400 divided by 12, that's 2,200 hours, okay? So that's the hour we are using. This number is from the static budget, okay? So this is a little bit different from the ones we have done before, okay? The one we have done before, we use the actual quantity, but only for the fixed overhead budget, only for the fixed overhead variance, the middle box is from the budget, okay? So 22 times 2, standard rate. So that's the 4,400, okay? So this is my actual, so the number one, 4,900, this is my actual fixed overhead cost. And number two is the 4,400, this is my budgeted overhead cost. So the difference between 1 and 2, we call it fixed overhead budget variance. We also call it name spending variance, okay? And then between 2 and 3, that difference is due to the standard hours and the normal capacity. So the standard hours is 2,000. The normal capacity is 2,200. See the volume, right? That's the volume variance. And this is the only term for fixed overhead cost, okay? So fixed overhead variance has two components. One is budget variance. The other one is volume variance, okay? So now, why don't you work on this one? This one should be very easy, right? It should not take that long. So by now you should have the result if you truly understand what I have done. 1,000?
Is it a B?
B? Very good. That's the right answer. Why?
So basically I did 40,000 by 960,
Mm-hmm.
and then subtracted it from 391.
Okay. So actually, that's correct, but you don't have to go that complicated, right?
Really?
So what's your actual cost?
Actual cost is 391,000.
Yeah. And what's your budget cost?
384,000.
These two information are given, right?
Yeah.
And the difference is the budget variance, right? The difference is the budget variance. That's the 700. That's the $7,000. Okay. And we also call the budget variance. We also call it the spending variance, right?
Yes.
So you don't even have to calculate anything. They already give you the two numbers. One is 391, that's the actual. And they also tell you the budget, 384. And the difference between these two, we call it budget variance, remember, right? When we figure out what's the variance in the fixed overhead, you use the actual cost versus the budget, right? That's the budget variance. And that's the 7. And the budget variance is also called the spending variance, right? So that's the 7,000 unfavorable. Does that make sense?
Yes, it does.
Yeah, but the way how you do it, there nothing's wrong, right? Because the reason why they get a 9.6, they used 384,000 divided by the 400, right? That's how they get a 9.6. Yeah.
Thank you.
Yeah. Okay, so that's this one. Okay, so I have 1 more minute. So I'm going to talk about these slides. This slide is important. So I want to talk about the total budget variance, okay? The total budget variance is related to the total variable budget variance and the fixed overhead spending variance. The fixed overhead volume variance is not part of the budget variance, okay? So here, in this setup, the budget variance is only between 1 and 2, okay? So that this spending variance and budget variance is part of the overhead budget variance. This volume variance is part of the fixed overhead variance, but it's not part of the fixed overhead budget variance. I'm not sure if I made it clear, right? So overhead variance is a broader concept than overhead budget variance, okay? So overhead variance is a broader concept than the overhead budget variance. And what's the difference? The difference is the fixed overhead volume variance, okay? So fixed overhead volume variance is not a budget variance, okay? The fixed overhead budget variance is captured by this spending budget, okay? And the volume variance, this is only a concept for the fixed overhead cost. It's also called production volume variance, okay? Okay, I think I covered everything. There are only 2 more slides. Only 2 more slides I didn't do. And also there's this appendix about the accounting journal entries, okay? So let me know, have a read of these few slides about accounting journal entries. Let me know if you have any question, okay? Okay, so class is dismissed. I will see you on December 7th, okay, about the second part of the budget. Okay, so have a good weekend, everyone. And if you have a question, please stay. Okay. Bye, everyone.
Thank you.
Take care.